Hello, I am Teddy. In this video, we're going to be giving brief history of dark pools, algos, and how their war sparked the market you see today. After that, we will cover our dark pool indicator, as well as how to use it on the web or desktop platform. It all began with a new breed of trader, a trader that knew the blueprints behind the market and its inner workings. They were known as the plumbers, and had become extremely valuable, worth hundreds of millions of dollars. A new lucrative job avenue opened up for thousands of nerds. They focused on gaming the plumbing itself, exploiting complex loopholes inside the blueprints like card counters working a dealer's blackjack hand. Dan Matheson was one of the OG plumbers who created Gorilla, the first mass-marketed robot trading algorithm that could skillfully buy and sell stocks in ways that evaded the detection of other algos, a lethal weapon in the outbreak of what later became known as the Algo Wars. It was the golden age of robot trading initially. But a freakish stock market crash on May 6, 2010, known as the Flash Crash, had revealed that the computer-driven market was far more dangerous than anyone had realized. This triggered a massive outflow of mutual funds, which was a huge concern for the US. They were fed up and convinced the market had become far too rigged. Here is a snip of the pit action on that day.
They come to sell them again. 9.5 straight night, 20 straight night, even straight here. Now, guys, 8 halves are trading as well. Once again, guys, they're going to get it in 8 halves straight. 8 even offer. 7 even.
The problem they were facing was known as front-running. Fast-moving robot trading, known now as HFT machines, were front-running long-term investors on all the exchanges. For instance, if Fidelity wanted to buy 1 million shares of IBM, the bots could detect the order and start buying IBM themselves, driving up the price and making IBM more expensive. If Fidelity wanted to sell 1 million shares, the bots would also sell, pushing the price down and causing Fidelity to sell cheap. To hide from these machines, the victims of the front-running were turning to dark pools. Large traders used dark pools like a cloaking device in their efforts to hide from front-running HFT algos that were programmed to ruthlessly hunt down whales like a Terminator T-1000. The new wave of dark pools became a driving force in finance, with the majority of big funds running for cover to survive. Initially, it was a solution to the problem. The lit markets had become a playground for highly sophisticated traders, and in reality, they still are. The exchanges got in bed with the robots, mainly because of the liquidity they brought to the table, and at the end of the day, as a business. But this created a surge in the dark markets. The exchanges were the creators of the problem. They provide expensive data to the high-speed trading firms that broadcasts terabytes of information about specific buy and sell orders from giant mutual funds, basically like a guided hunting trip. Before they introduced the electronic tape in the 1990s, it was a completely different game of hustle, a sense of nerves, intuition, and willpower. A completely different kind of talent. Those players and that stock market died. The dark pool was but a brief relief from the predatory algos, but they were on a relentless pursuit for the whales. They had already tasted blooded and all that cash, and eventually they thoroughly infiltrated the dark pools. It was now all cloaked in the darkness of a market mired in complexity and electronic smoke screens. But Dan Matheson, the OG plumber, wanted to stop them, and he set out to beat the speed traders at their own game. In 2009, he launched a turbocharged trading algorithm called Blast. Blast beat the absolute shit out of its high-speed opponents with simultaneous buy and sell orders, like a high-powered Gatling gun. The firepower of Blast was so overwhelming that it forced HFTs, who've actually controlled 70% or more of all stock market volume by the late 2000s, to tuck their tails and run. It was incredibly effective. But unfortunately, all this did was give birth to what's now known as algo wars. The mindless algos had evolved into dangerous monsters. They were getting smart. They even had names such as Shark, Gorilla, Stealth, Fall, Sniper. It was digital warfare taking place inside massive computers. Many were geared up with advanced AI systems that could quickly detect hidden market signals, as well as the so-called head fake or spoof algos infiltrating the options market. The dawn of the paid plumbers kept gowning. It literally became Revenge of the Nerds Wall Street edition. Years later, the consequences of this approach resulted in a market far more dark and secretive than anything anyone ever imagined. A market of secret algorithms, black boxes, dark pools, and mammoth computer centers, where programmers measured trades by the billionth of a second, a market so chaotic and complex. Trading had become a cloak and dagger game of hide and seek in mysterious algos doodling in dark pools. Artificial intelligence programs, as you know, have become so sophisticated that they can read earnings or live breaking news and react, just like a human reading the Wall Street Journal or watching live news, only they can do it in milliseconds. Sometimes it honestly feels like they know what you are thinking or what you're going to do before you do it. And they do. There are now herd-guiding algos developed by MIT geniuses, but that's another entire video in itself. After the flash crash, New York Stock Exchange launched a $500 million project called Alpha. They built a mammoth computer trading facility on the site of an old quarry in Mulwa, New Jersey. It's the length of several football fields, a 400,000 square foot place for computer-driven trading firms to put their computer servers right next to the New York Stock Exchange's matching engine. The computers that brought buyers and sellers together in the frictionless ether of cyberspace. There's 20-inch wide pipes that pump water straight in to cool the computers, and it has 20 surge protectors, each the size of a tank, protecting the site against power outages. Corruption, hacking, fines, jail, death, suicide, and more money have continued to breathe from this evolution. We won't get into all of those details. That evolution has led us to where we are today. The dark pool markets have grown to over 70 exchanges, and as more and more trading is being done in the dark, as algos grow, the dark pools grow. And no doubt the launch of my good friend GPT, we are about to see another push in the robot evolution. That was a very brief snip of how modern trading was born. So we know now that the dark pool is used for big orders that need to hide their execution. But that is exactly where we are going to benefit. By taking those trades and extracting them from the tape, we can then use that data in various ways, and one of them is by scanning and plotting for block trades. This lets us know where the big players are getting and getting out. We can also take all the smaller trades done by the programs and plot a trail, similar to a moving average line. This gives us an overall sentiment on direction, even from the dark algos. AI programs have nearly taken humans completely out of the equation. This has eliminated traders on the daily. You will hear it's impossible to trade these markets, or there's a 1% success rate. Retail traders never win, it's impossible. Those statements are true. The reason they are true is because people refuse to face the facts. It does not matter what the internals are, it does not matter what headline came through, or even what hawkish or dovish FOMC statement is being said. The robots don't care and they are running shit. They are playing math chess, and that's the game now. People fail because they will not accept this truth, and in order to win, you have to see things for what they are. A video game of stocks, a completely rigged technical nightmare. But if you can fix your perspective, then congratulations, you have a chance. Let's dive into dark pool tools on Flowtrade. We will start out with the web version first. Here we have SPY on a 1-minute chart. On the toolbar you can toggle between 1 to 15 minutes charts. The web version is limited to only these 2 timeframes, but they are all you need when tracking this stuff. In this box you will set your look back period. This chart is currently showing the past 2 days of data. We have the dark pool blocks set to blue and the regular blocks set to red. Now you will notice this little white diamond. This is the time when the block came through. If you notice that shortly after each block came through, the trend changes. The moving average looking line is tracking any size trades coming through the tape that are from the dark pool exchange. Tracking the dark HFT sentiment is a bit trickier. Price won't always respond right away. Typically, it's a longer plan. Learning to decipher the games takes some time in the seat, but in this situation, things are clear. We can definitely see. They begin to sell a couple hours before the big block hit. That gets us a good read. And once price rejects that block level, we would be ready to take a short position. Let's move on to the next chart, which is actually a low cap ticker, VKTX. When analyzing the dark pool blocks, you always want to pair the analysis and decision making with the flow index. The robots control direction on a daily basis. You can see again how well price is respecting these block levels. I want you to take a look at these 2 block trades. When price is testing a cluster of blocks for support or resistance, you want to turn to flow index to help gauge how those blocks are being used. You can see they're selling very aggressively, but in these situations, if price holds that dark pool cluster, it's going to turn into a slingshot as soon as the robots flip to buying. This is showing absorption. All of that selling was absorbed, then algos flipped and price ripped. If you want to see more stats including value, time, or size, then click this tab to take you to the block trade scanner section. Next, we are going to take a look at the desktop block trade tool and its functions. After opening up the desktop platform, make your way to the lower part of the chart where the volume analysis tools are. You will see Power Trades. Open this tab. Power Trades is our dark pool scanner. Click the sprocket to open up the bigger settings panel so that we can go over the different settings available. Total volume category is the minimum volume you want displayed. The next box labeled time interval is how fast the volume has to come in by. For example, our settings here mean there needs to be 20,000 shares within 1 second to quantify as a block. Next is basis volume interval. This parameter shows how much percentage it took the traded volume in the total volume for the specified time. This is a category display parameter and is tied in with the display tables that we will go over shortly and does not affect the data being pulled from the scan. Min trade volume is exactly how it sounds. This sets the minimum volume that will be allowed when calculating. For example, if you set it to 5,000, everything below 5,000 will be dismissed. Max trade volume is the same, but puts a cap on the max volume in the calculation. For general all-purpose scanning, we'd recommend setting it to an abnormal amount for no interference. Max and minimum zone height ticks is a very instrument-specific tool. We'd recommend setting these parameters the same as max and min volume. Level 2 level count is going to show the number of levels that are involved in the calculation of imbalance and the level 2 ratio column in the table of results. This has no effect on the scanner. It is a filter for the columns in the table results section. The same with filter by delta %. This parameter will show zones that have a delta value greater than or equal to that specified in the settings. The value must be specified in the settings module, so the table will show both positive and negative delta values. Filter by basis ratio %. The parameter will show zones that have a basis volume % value greater than or equal to that specified in the setting. We recommend leaving these settings at 0 in order to gather all the data. Unless you're trying to isolate specific trades, then tweak these to your liking. Area color is the color of the block when it is displayed on the chart. Then highlight is when you click on a black on the chart. This is the color it will be highlighted in. Now onto the sidebar view mode. This is where you are going to display the blocks you have scanned for. Selecting one of these will open up a right side panel for display. Full is going to show the blocks and market depth. Table results will be just the blocks, likewise for market depth, and none is obviously none. The display columns on the right side can be accessed by simply right-clicking them to bring up settings. Each one of these columns can be activated by clicking the visible switch. The parameters are tied into the specific settings we went over earlier. You can also change the header text if you like. In case you adjust the settings to retrieve something specific, it can be relabeled. A good recommendation is using the time volume and the delta to get in a read on bullish or bearish bias for the specific blocks. Now let's get a look at everything in action. For each of these columns, you will also be able to click the antenna on them individually for even more specific parameters. For example, I can set the time to be past week or past 2 days, or even just a specific date range. The volume can be isolated by more than or less than or just a specific range. Now selecting a candle by hovering over it or clicking on it, it will display a pop-up showing the total volume, the delta percentage, and the basis ratio. After clicking a block, you will see that specific block become highlighted on the table results, or click on any of the blocks from the table results, and the chart will automatically adjust to when that block took place. That's Darkpool Block Scanner and the basic setup. Let's take a look at NQ from the past couple days to see how we can tie all of this together. Now there are no Darkpool trades on the indexes, but it works as one and the same. In this first flurry of block trades here, I was able to click on the majority of them and quickly find out they are all buy blocks. There was a little flurry of sells here, but not many. Once again, we tie things together with the flow index. We can see while those buy block were coming in on one of our major buy triggers. But the algos continue to be dominant with the selling, but we can recognize that all that selling is being absorbed. So once again, when the robots join the party, price is going to slingshot up. Price eventually starts to take off once the robots start buying. And as price is climbing along the way, there continues to be buy blocks trades coming in. And it isn't until price starts to reach the 2 target levels, then things begin to change to sell blocks hitting the tape. We know that it's time to take profit, or we know that it's going to be the top momentarily. We also see the algos had already begun selling as well. Well, thanks for watching this intro video into the topic of Darkpool and algos. You now know the birth of their dominance that led to the market we have today. Hopefully you can see the importance and value of knowing what they are doing and be able to use these tools to your advantage against the ever-evolving robots.